Richard Cookson, an economics professor, just wrote an opinion piece in Bloomberg and suggests that we might get blindsided by a certain type of inflation that could end up crashing markets. Let's talk about this, because as of the latest poll that I ran on my Twitter here on June 4th, a couple days ago, I asked, do you believe that inflation is transitory, that is, inflation will be back or under 2.5% by mid-2022, or do you believe that inflation is not transitory, that it will be over 2.5% for the next few years and beyond? 57.2% of you, so the majority of you, believe that inflation will be transitory. In other words, the Federal Reserve's message is working and inflation is expected to be transitory. However, 42.9% of you do not believe the Fed or, quite frankly, Janet Yellen. In fact, Janet Yellen just this weekend doubled down on her beliefs. And I'm going to give you a quick summary of her belief so that way we can compare. So here's the thing. Janet Yellen believes that inflation in the short term, much like the Federal Reserve, believes that inflation is going to sit around 3% on a year-over-year basis throughout the rest of 2021. So when we compare 2021 to 2022, we'll have about that 3% inflation. She, much like Jerome Powell, also says, quote, I personally believe that this represents transitory factors. In other words, hey, we were in a recession last year, prices fell, now prices are up. Supply chain issues are creating bottlenecks because everybody's buying stuff again much faster than expected. That also leads prices to go up, and that these things are short term. We're not always going to be looking back to a recession, and we're not always going to be dealing with supply chain pressures. And this is true. Generally, supply chain issues take about 2 years to resolve themselves, but they resolve themselves. And on this channel, we've regularly said that we would expect both of these things to start resolving themselves by September. As schools reopen, people can go back to work, wage pressures go away, supply pressures start easing up because companies start figuring out how to manage their supplies more appropriately, and we're not comparing to the pit of last year anymore. So that's kind of the catch-up. We already know this, and we also know that Janet Yellen has just come out in the last 2 days saying, look, basically, Joe Biden could even print as much as $400 billion a year, just keep cranking the money printer, and we'll still probably not have a lot of inflation. And Janet Yellen says this because we've been fighting deflation for the last 10 years. This is very similar to the Cathie Wood argument, which is, hey, look, we have technological changes that are pushing prices down, and as companies become obsolete because new companies replace them, old companies end up dropping their prices. And third reason, we end up having products that end up becoming so much better and more useful for us. Not only do those products become cheaper, but we might not even need the high level of a product we previously had, allowing us to take another step down the cost curve. In other words, a lot of reasons why we are fighting deflation. However, that is the catch-up part. What is this Richard Cookson saying? Well, he's an economist and he's a professor, and he believes that the Federal Reserve and Janet Yellen are using flawed logic. He says that, look, the Fed's argument is that we've been fighting deflation for so long, but the problem is their thinking is entirely wrong. The reason he gives for that is because he measures domestic services rather than manufactured goods. Now, this is interesting. Remember, a good is a product, right? Like a coffee mug, this is a product. Or Mr. Wall Street Bets diamond hands. These are products. Cell phones, TVs, these are products. But what about real estate agents or doctor services, healthcare services, cleaning services, CPA services, dental services, photography services, wedding services, you name it? A lot of our economy is driven by services. In fact, one of the things that I talk about regularly in my programs is you got to figure out how to provide value to people with a high-paying service. And you can always build wealth very quickly when your income goes up because you can invest more, faster, and retire sooner, right? Number one goal, if you're making under $60,000 a year, should be go make more money. Figure what can you do to make $100,000 a year or more, right? Now, this video isn't about you building your wealth. My channel is about that, but I wanted to slide that in here. Services can be a great way to build your wealth if you can figure out how to provide a really good service, like being a real estate agent, pretty profitable these days. But anyway, this individual is saying, hey, look, the Fed and Janet Yellen, all they seem to care about is the consumer price index. Now, in fairness, the CPI does include some measures of services, but mostly it has massive items for food energy, energy services. Then we have things like apparel, cars, medical commodities, alcohol, tobacco, smoking. We do have shelter, so housing, which in theory is considered a service. Some people consider it a good because you're receiving a actual building. But they do include some measures in here of services like motor vehicle maintenance and repair, motor vehicle insurance, airline fares, hospital services, physician services. So some services are in here. And this is by no means a comprehensive list. These are more the expense categories. You could actually break these out very, very detailed into even like this: fresh sweet rolls, coffee cakes, and donuts. Yeah, because I'm buying those every day. Not really. But I mean, look how detailed this goes. Telephone services, postage and delivery services. So in fairness, like, there are actually services in the CPI. But this particular economist believes, no. They are completely underweighting the impact of services, because if you take out the manufactured goods and you only look at services, prices have remained stable at 2% over the past few decades. And even though the prices of these tradable goods have been fluctuating, they've fallen and now they're going up like crazy because of supply shortages and worker shortages. And this is where the economist says very succinctly, the question now is whether prices in the ravaged services sector start to pick up smartly as the economy reopens. And his definition of smartly is raise your freaking prices. I think they will, because the companies left standing will need to make up for their losses by raising prices, and because being fewer of them, they can. He goes on to say that all of this wouldn't be such a big problem if markets weren't at such nosebleed levels like they are now. Back in 2018, we had a higher stock market, but it was nowhere the level where we sit now, and the market still sold off 12 to 13% when the Fed started raising rates. And this is why he ends with, if I'm right about inflation, the Fed, however reluctantly, will be forced into an about face. At that point, asset prices will fall, probably a lot, as the Fed is forced into raising rates substantially, and that is the big danger. And this author believes the Fed is aware of that. So folks, this is an interesting argument that we haven't really heard before, that maybe in addition to just paying attention to broader indices like the CPI and PCE, which we don't really love just paying attention to those anyway, it's also important to start paying attention to some of those services. Are things for medical services going up? Is our car maintenance, are those prices going up? Kind of like we see certain prices of like lumber or copper or other materials going up, or other like chips, for example, computer chips, right? Are we seeing that happen in services as well? And have we been blind to potential service price inflation? Folks, let me know what you think in the comments down below. This could have big implications for the market. I personally am still leaning with my September-October 70 to 80% shot that the markets are going to be very nicely recovered by September and October as we start seeing inflation trend down. And I'm not so sure we're going to see this service price inflation, but it's something to keep an eye out. And I love reading and finding these things because I'm always trying to look at what am I not paying attention to. I have to say, I wasn't paying as much attention to services as I probably should have, so I will more now. Thank you so much for watching, and I'll see you then.